Okay, well, let's get going. Thank you all for joining us today in celebration of the recent graduates of the class of 2021, as well as the reunion classes. I'm Eleanor Powers. I'm one of the co-founders of HACE, as well as the director of programming, and I'm a graduate of Harvard Radcliffe College. So Harvard Alumni for Climate and the Environment is a shared interest group under the Harvard Alumni Association. We received formal approval in April of 2020, so just over a year ago, and since then we've added over 1,300 members. As a volunteer-led organization, our mission is to connect and to support Harvard alumni in making a consequential response to climate crisis, as well as a sustainable and a more just world. We hope that you'll continue the connections and the conversations that you make here today by joining HACE, and we've put the bit.ly link in the chat group for you to do that. And we'd also be really deeply grateful if you could share the bit.ly link along with information about HACE to your friends in your Harvard classes, as well as the rest of the community who you think would be interested in supporting our mission. Today's event, we're going to hear from 4 recent graduates, Shada, David, Megan, and Alida. Then we're going to create breakout rooms featuring these speakers as well as reunion years, so you can continue the conversation. I'm now going to turn it over to Jessica Wong, one of our student speakers from our event last year, who will make introductions. Thank you.
Thanks, Eleanor. And hello, everyone. It's an honor to be introducing our first inspiring speaker, Shada, to you all. Shada is an advocate for climate action, green economic transition, and sustainable development in Jordan and the broader region. She's an advisor to the government of Jordan on sustainable development and green recovery, and a senior advisor to the European Bank for Reconstruction Development for the project to establish Jordan's National Center for Innovation. She served as director of the Jordan Environment Fund at the Ministry of Environment and as director of the clean tech sector at the USAID-funded Jordan Competitiveness Program. She is a member of the Mowgli Mentoring Network, a member of the advisory board for Water Energy for Food, a regional entrepreneurship program. She is also a member of Jordan's Green Entrepreneurship Network. She holds an MPA from Harvard Kennedy School, as well as an MEng and BS and Bachelor's of Science degrees in Environmental Engineering from Cornell University. She's a LEED accredited professional and a certified energy manager, renewable energy professional from the Association of Energy Engineers. And Shada is the founder and CEO of Sustain MENA, which is both an advisory and public awareness platform. Congratulations on your graduation again, Shada, and we're so excited to hear your ideas.
Thank you so much, Jessica, for that warm and kind introduction. I'm going to try screen sharing, and I hope it goes well. Please let me know if you can see my screen.
You're all good, Shada.
All right, great. Thank you so much, everyone, and good evening from Amman, Jordan. It's actually surreal to recall that I was almost a week ago with some of you in Cambridge, and after a sunny week that you might recall, we had quite a rainy send-off on my way back to the airport to Jordan, which was an apt reminder that climate change is here, and after the euphoria of graduation, we still have quite a bit of work to do. So I'm going to be telling a little bit about how we're trying to change the narrative in Jordan. Before I tell you more about our context, just to share my experience over the past year, since it was a Zoom format, I was actually able to continue some of my advisory work to the government of Jordan. And it was actually really great to be able to apply much of what I was learning at HKS in real time as I was supporting the government in mainstreaming climate change in national reform programs and developing the green recovery strategy post-COVID-19 for Jordan. Now, Jordan, there's an overriding narrative that this is a country with limited resources. We keep saying or hearing that we're the second most water scarce country in the world. We import 92% of our energy. Only 7% of our waste is recycled. 1 in 5 people you meet is a refugee, and unemployment has just soared after COVID. And I'm sorry, it's not an alarming 252%, but it's actually 25% unemployment, which is reached in the last quarter of 2020. And so given that sort of bleak reality, what we're trying to say here is that there are actually opportunities to really shift this narrative. And the reason I'm so hopeful is because we have a young and educated population, particularly among women. Jordan is becoming more and more an entrepreneurship hub. And with all the new startups that we're seeing, about 20% of them are considered green. And when I say green, I mean startups that operate in water, energy, food, or waste. And there are so many programs around green innovation, impact investing. Climate finance is a growing area as well. We've just received notice from the Green Climate Fund of a $33 million project in agriculture, from the Adaptation Fund, another project for around $14 million US, which would be helping in a lot of refugee afflicted areas as well. And many of the international organizations you're all familiar with, like USAID and the World Bank and the EBRD, whom I work with, are very active in Jordan. So these, to me, are causes of hope. But also another cause of hope is the policy framework. So starting with the country's vision 2025, where environment is a key pillar, but then moving on to Jordan being one of the first countries in the region to issue what's known as a green growth plan. And we just launched our action plans for 6 sectors, even during COVID. And for me, it was really heartening to see the Ministry of Environment issue something like that in the middle of a pandemic, where we're also obviously dealing with many urgent economic challenges. And in Jordan, when we say green growth, we talk about better quality growth that is both socially inclusive and environmentally responsible. It is also the country that issued the first climate change policy in the region, and we're currently updating our NDCs ahead of COP26, and only last month issued our national adaptation plan. So there really is quite a conducive policy framework. But at the same time, sometimes people really don't pay much attention to the policies, right? The average citizen wants to see projects, want to see the impacts on the ground. And so there have been a number of pioneering projects in Jordan in a range of sectors. Just sharing with you here a few examples. So we have one of the first waste to energy projects in our largest landfill in the capital, Amman. Jordan has one of the highest penetrations of electric cars. We have over 25,000 electric cars on the road today. And there is talk now of introducing an electric charging network. Ecotourism is also, most of the country's economy is dependent on tourism, but within that, there's a subset for ecotourism. Some of these places are on the global map of tourism. And at the same time, unique places like the Dead Sea, the lowest point of Earth, you might have heard of it, is actually shrinking at an alarming rate of 1 meter per year. Due to climate change, but other over-extraction challenges as well. But to deal with that, Jordan is trying to introduce a very innovative project called the Red Dead Project, which would convey water from the Red Sea to the Dead Sea, producing energy and fresh water along the way. Jordan has met its target of 10% renewables in the energy mix by 2020 and is now trying to exceed that target. And on the bottom right there, you see the Samra wastewater treatment plant, which is really considered one of the most energy efficient wastewater treatment plants in the region. So for me, these two are all causes of hope and help to demonstrate the business case for going green in Jordan. And so what I mentioned to you earlier, the assignment I was involved in developing Jordan's green recovery plan was within that Build Back Better framework that you must have all heard of. Some people like to call it the Build Forward Better framework, whichever way. Just to give you a quick glimpse of what we did in developing this plan. So we've, of course, looked first at the impacts of COVID-19 on some of our key sectors. And for Jordan, those were agriculture, tourism, health, and energy. We started introducing recommendations on green recovery by looking both at our local policy frameworks, but international best practice as well, because other countries are actually undergoing this exercise as we speak, with support from an organization you might know, the NDC Partnership, which is based in Washington, D.C. And so we try to identify these entry points for green recovery in ongoing economic recovery plans, in our national reform matrix, which actually Harvard Kennedy School had a role in helping Jordan to develop, and our updated NDCs. And so what we're seeing is that now, we're trying to marry the language of, the Ministry of Environment and all the environmental plans I mentioned to you and the climate plans with the language of the Ministry of Planning and the Ministry of Finance around economy. And it's really exciting for me to be able to blend the two worlds. And this is really the reason I came to the Kennedy School as someone with an environmental engineering background. I feel I'm able to now help bridge the communication gap between the practitioners on the environmental side of the policy spectrum with those working on economic and fiscal policy. And so we're no longer just talking about indicators around CO2 and water, but also trying to marry those with indicators around jobs, investment, and export. And of course, part of this work is communicating these findings diligently as we go within the government and more broadly with the broader community in the country. And so just to end on a note here, share some of my lessons learned from this kind of climate action in Jordan. I feel that the ingredients for success really need to have first a vision and a policy framework. So like I mentioned, the overarching vision for the country, but then more specific sectoral frameworks, and of course, regulations that can enable real investments. Also, we had really successful regulations around renewable energy. We need now to strengthen our regulatory frameworks in new technologies such as waste, storage, and hydrogen. The private sector is key in Jordan and in anywhere else, as you all know, and climate finance can certainly play a role in that, but also we've got private-public partnerships as a mechanism being pushed forward through our prime ministry. Innovation and entrepreneurship for a country like Jordan that has a young population with very high unemployment is also going to be a key part of our climate solutions in Jordan, again, centering around green innovations and R&D. And here I'd like to say that although maybe Jordan is producing solutions to local problems, there's definitely an opportunity to export these solutions on a South-South basis or between countries of the global North and the global South. I think it can obviously, innovation can go both ways. And finally, just as students at the Kennedy School and across Harvard, actually, being those people within government or wherever we find ourselves, actually, when we go back to the workforce, to bridge that gap between those who speak the language of the environment, but then those who are also implementing policies on the economic level. And you see very exciting developments like the recent report from UNEP, which around finance for nature, where practitioners in the environment are starting to communicate the economic benefit of investing in nature and nature-based solutions. And so my message to you all is if a little country like Jordan can take on this kind of bold vision, I urge you all to be bold and dare to dream of a new paradigm. Just leaving you with the words of King of Jordan he just gave last week at the Seoul Summit for Climate, that the threat of climate change is not a problem of one country or region alone, but a drought in California, a flood in Kenya, a wildfire in Australia, they all reverberate across the planet to threaten our very existence. And so I hope that we can continue to use the platform of the Harvard Alumni Association for Environment and Climate to continue to exchange ideas. And I look forward to engaging with you all in the breakout rooms. Thank you so much for this opportunity.
Thank you so much, Shada. It's going to be great to have a chance to ask you questions and learn more in the breakout sessions. So next, I'd like to introduce Shai, who will introduce our next speaker.
Great, thank you so much. My name is Shai Sachs, Harvard College class of 2001, and I'm here to introduce David Liebman. He holds a BA with an environmental focus from Middlebury College and graduated with an M.Ed in the Harvard Grad School of Education School Leadership Program just last week. He's worked as a teacher and administrator in independent schools since 1991. So with that, let me hand it over to David. Thank you very much.
Thanks, Shai. I'm really pleased to be here today and honored to speak to this group. I just graduated as a mid-career master's student from the Ed School, and I've been an independent school teacher and administrator for about 30 years. So I'm coming at this issue of environmental change as an educator. One place I would start before I start my PowerPoint is just to say that the folks that are going to be dealing with this the most are kids and younger people. And as a mid-career student at Harvard, it was very clear to me that we are not preparing students well for the challenges that lie ahead. Particularly kids in elementary, middle, and high school right now, which is the group that I work with. And I would encourage you, if you have a voice in your local community in terms of the public schools or independent private schools, to really speak up for climate change curriculum, which is virtually non-existent at this point, and is troublingly lacking. And with that, I'll switch gears and talk a little bit about climate and disability, and I'm going to screen share to do that. So give me 1 second, if you would. Folks see my screen share?
Great, David.
Good, okay. So I was a sustainability fellow at the Ed School this year. It's an unpaid, unfunded role, which means I got to take on extra work. And it was really fun to think about the intersection of climate change and disability because family members that I have are disabled, and it makes me think about what challenges they're going to be facing in the coming years and decades. The WHO estimates that 15% of the global population, or about 1 billion people, have some form of disability. Disability is broadly construed to mean intellectual, physical disability, visible, invisible disability. It's not one thing. There's no unified disability community as there are in other areas. And that made me really stop to think about who's being affected and how are they being affected. It's an intersectional experience of age, gender, race, economic status, and disability. And if you Google disabled person, it's not reflected very accurately in Google. Sorry, one sec. So when I Googled disabled person, these are the images that I got. Folks sitting in wheelchairs, which is not the vast majority of disabled people. There are about 2.17 million wheelchair users in the US. It's less than 1% of the population. But that's what folks think of when they think of disabled individuals. But what I was thinking about was folks who are have mobility differences and challenges, but may not be in a wheelchair. And it made me think about some of the heat waves that we've experienced in the last couple of years, particularly this one in Europe in 2019, where there were over 1,400 heat-related deaths with temperatures ranging from 105 down to 80 degrees. So you can see the heat map. We're going to see things like this as climate change continues to evolve and happen. It made me think about folks who can't get out of the way, essentially, need help and are going to need assistance to deal with climate change and the impacts of climate change. This is the seaport in Boston on a sunny day in July of 2019. This is what we're going to be facing. And if this is the reality of the future, folks with disabilities are going to have a disproportionately difficult way to manage challenges like this. There is a real dearth of scholarship in this area, very few published papers and very little research being done. A little bit of EPA research, a little bit in scholarly journals. I would point you to Michael Stein at the law school, whose Harvard Project on Disability is doing some good work in this area, but it's vastly understudied. So if climate displacement happens in the way that folks are predicting it will, there are going to be 200 million climate migrants by 2050. Just as a proportion of that group, that means there are 30 million people with disabilities that may be climate migrants. So something to think about and something to start to plan for. In the disability world, there's something called the curb cut effect, where folks without disabilities do things to change the landscape for folks that have disabilities. So curb cuts are a great example of that. Curb cuts were originally designed for folks in wheelchairs, but they were promoted by moms with strollers. And the disability community is very marginalized, particularly in many developing countries, but in the United States as well. It doesn't speak with one voice. It doesn't speak with a lot of political power. So it's going to take allyship to make things happen, to make sure those folks are supported. There's a phrase that I would encourage you to think about in the disability community: nothing about us without us. So any planning, any work that's being done in this area needs to include folks with disabilities to make sure that their voices are heard and that their perspectives are taken into account. And the message that I would leave you with is just being supportive, getting involved, bringing your resources and taking action together. I think it's going to be really important for folks with disabilities to make sure that their needs are being heard, but they're being supported well by folks who have power and authority, people like the group here today that can make change happen for all of us in a positive way, but particularly for folks with disabilities. So thank you very much.
Great, and I believe we're now handing it off to Clea. Hope I got that
Thanks,
right.
Shai. My name is Clea Schumer. I'm college class of 2020, coming to you from Salt Lake City. And it is my privilege today to introduce Megan Murday, our next speaker. Megan is the founder and CEO of Metric, which is an analytics software startup that measures portfolio ESG performance for private market investors. She just graduated last week as a Baker Scholar from Harvard Business School, where she served as the co-founder and co-president of the HBS Sustainability Club. And before HBS, she was a strategy consultant and an alumna of Georgetown University. So Megan, I will pass to you. We're looking forward to hearing your presentation.
Wonderful. Thank you so much, Clea, and it's a pleasure to speak with everyone today. I'll go ahead and pull up my slides, but as Clea said, I'm Megan Murday. I am the CEO and founder of Metric, and we are building ESG analytics software to help private market investors like private equity firms, venture capitalists, measure their portfolio's environmental, social, and governance performance. So we are excited about this data set because it allows the private sector to use its speed and scale to meaningfully address large-scale issues like climate change. The private sector can be an active partner with the government. I actually studied policy undergrad at Georgetown, but the private sector needs ESG data in order to be able to align outcomes that are sustainable, equitable, and profitable. There's a lot of demand out there for this data set today. Investors are being asked for this data from their limited partners, from their employees. The end customer of these companies also expect increasing transparency. But it's actually really hard to do. The first question I'm often asked is, well, where should we start? There's an alphabet soup of ESG frameworks from GRI to SASB to TCFD. And then even once you've picked a framework, it's really hard for these investment firms to then collect the information from their portfolio companies. If you ask someone what their scope 2 greenhouse gas emissions are, you're going to receive blank stares because hardly anyone has read the greenhouse gas protocol, and nor should they need to. So we are focused on simplifying portfolio ESG measurement. And we do this by recommending material ESG KPIs. We work across the different ESG frameworks. We are not here for the Megan Murday ESG framework. We work with the existing, within the existing frameworks. We then help portfolio companies gather the required data inputs, and then we provide back to the company and the investor their ESG performance, comparison to peers, and the financial impact of that performance. So to give a sense of the approach that we take for data collection, it's very akin to TurboTax. So for example, the software would ask a company, instead of what are your scope 2 greenhouse gas emissions, we would ask, does your company purchase electricity? If they say yes, we ask them to upload a few months of utility bills. We then take that information and map it through to their local electricity grid. We look at the energy sources that are used to power the grid. We then map that to emissions factors and arrive at their greenhouse gas emissions without expecting the end user of the software to know any of that more detailed ESG specific information. So we use, again, a TurboTax-like approach. It takes less than 3 hours for data collection. I sat with the first few companies who used the software, and we were off the call within an hour and a half. They were able to get all of the data inputs, and those are things like utility bills, equipment usage data, particularly for manufacturers, product specifications, and HR data that has PII masked. And that allows us to measure 9 core ESG KPIs, everything from water use, energy use, through to employee turnover, compensation, et cetera, allowing investors to start to build a comparable and reliable data set that they can use to inform decision making. So once we've collected these data inputs, we're able to provide back to both the investor and the company their ESG performance. So it's a standalone measure of their performance over time, its comparison to peers within their industry. And then I'll call out this bottom left-hand corner on financial exposure. I'm excited about this data set because I think it will enable the private sector to address issues like climate change, but I am not naive enough to think that any company or investor will do so unless there's a business case. So we are laser focused on making sure that each core ESG KPI maps through to financial impact. So to continue with our greenhouse gas emissions example, there is no federal carbon tax in the US today, but it's still good to show a scenario analysis around different carbon tax regimes so that a company can know if Biden's $51 social cost of carbon were a tax tomorrow, what their liability would be. So this is meant to inspire action early and ahead of federal regulation. So finally, we're driving value for both the investors and the portfolio companies since we are serving both. And I've heard loud and clear from investors that they won't ask their companies for any information that's not easy to collect. So this is for investors, this is material data to inform decision-making, to use for fundraising, and also to include in quarterly LP reports. This also helps them run their portfolio more efficiently as well. All of these numbers around resource use, employee turnover, those are costs for the end company, and it's good to be able to manage those and share best practices across the portfolio as well. And then for the end company, this is a much simpler way to do ESG measurement. It avoids costly consulting engagements, and it also gives them new insight into their business, both their ESG performance, but helping them use this as business performance data too. So thanks again for your time today. Very excited to talk about this further with you in breakout rooms.
So much, Megan, and like Megan says, everyone will have a chance to join breakout rooms after to speak with any of the speakers they'd like to hear more from and ask questions to. Now I will introduce my friend Charles for our last introduction.
Great, thanks, Clea. My name is Charles. I'm currently actually a junior at Harvard studying statistics and math, and it's my pleasure to introduce my friend Alida. Alida is a recent graduate from Harvard College as of last week with a Bachelor of Arts, who concentrated in environmental science and public policy with a secondary in astrophysics and a citation in Italian. Alida has experience working with the World Bank, the Harvard Office for Sustainability, and Broadridge Financial Solutions, and is currently working with the World Resources Institute in their climate program, and will be working at ICF Consulting as a climate change researcher in the fall. And in her free time, Alida was part of the Radcliffe Choral Society, Green Think, and the Harvard Ballroom Dance team while at Harvard. So happy to kick it off to Alida.
Hi, everyone. Thanks so much for having me. I'm just going to quickly share my screen. And while I'm doing that, basically today, I'll just be speaking a little bit about my senior thesis. Let me just enter full screen. And so can everybody see my screen right now? Okay. So there's a lot of information on here. I'm going to run through it. I'm not going to go through all the details, and we can talk more in breakout rooms if you want to hear more. But basically what my senior thesis did was looked at university fossil fuel divestment and whether or not that actually had any impacts on greenhouse gas emissions. Because unfortunately, if you read the relevant literature regarding divestment, there's very little consensus as to whether it actually has a bottom line impact. Because that's the point, right? We want to reduce greenhouse gas emissions by restricting the social license of these fossil fuel companies. So what I did in my analysis, basically I looked at stock returns and whether or not divestment on the day that universities announce that they have divested, whether or not there's any impact on the stock return of that company. And the reason why I went through share prices is because divestment is chiefly a financial instrument, and there's not a great amount of greenhouse gas emissions data for the timeliness that one would need. You would need it on a daily basis, and unfortunately, fossil fuel companies don't report their greenhouse gas emissions data on a daily basis. And so by looking at the share price, if it impacts the cost of equity for these fossil fuel companies, then there can be an argument that they would have less capital expansion from that. So what does that mean? So let's say a university says we are divesting, and then on that day, a fossil fuel company has less equity. Their stock price has gone down. That would mean that they would have less overhead to maybe have a loan or to just invest in a greater, let's say, a coal field. They won't buy more coal. They wouldn't buy more oil. So then you could make an argument that from that decreased investment, that was avoided, there are greenhouse gas emissions that were again avoided, and you can say you lowered greenhouse gas emissions. And so that's what I did. And so there's a two-pronged analysis. So first, I did an event study analysis. That's a very fancy econometric way of saying you looked at whether or not there was a change in the share price on the day that universities divest. I had a portfolio of about 41 universities that divested from 2013. And I did find that there was a negative impact on the share price. Now, this is saying a 10-day CAAR. That means cumulative average abnormal return. Again, we don't have to go into the details. If you look on the right-hand side, there's a graph there. The point is that the trend is negative. You see a negative trend, right? It's interesting. It kind of goes up in the middle. And basically what that is showing is just a window around the day that universities say we are divesting. So a window around that day. So that's very exciting because it was very statistically significant. And most economists say you would find nothing. So yeah, there was something that was found. And then to make sure that that change in the share price actually affects whether or not these fossil fuel companies expanded, I looked at SEC, Security Exchange Commission's filings to see whether or not these fossil fuel companies state that university fossil fuel divestment is a material risk to their financial security as well as their capital expansion. And 75% of the US-based fossil fuel companies that I explored said yes, and specifically mentioned divestment as a material risk. Why is that important? Because if they mention it in their SEC filing, that means they're afraid of litigation. That means it's actually a risk. So there is an argument. Basically, my paper makes an argument that from these capital expansions that were avoided, you can argue that divestment does impact the greenhouse gases emitted. There's a big caveat to that, however. Because I did not directly look at greenhouse gas emissions from these fossil fuel companies, we do not know the overall change in their greenhouse gas emissions. For example, let's say that they did not buy that coal field, but they had less money to invest in maybe their sustainability work or lowering their emissions from other parts of their supply chain. We don't know what the overall change in their emissions was then. So I can't give you a yes or no answer on whether or not it works overall. But I can say that, yes, there is evidence that from these avoided capital expansions that greenhouse gases were lowered. And so that's basically kind of the entire thesis, the entire 100 pages. Please don't read it. It's too long. And, you know, as a final caveat, there may be some evidence that divestment has an increasingly large impact after 2017. There is some evidence of that. It's not as concrete or statistically significant as this kind of like negative effect on the share price, but that is something interesting that definitely further research should be explored on. So thanks very much. That's kind of it. If you want to talk more about it, please come to my breakout room, and happy to be here.
Thanks, Alida. And now we'll just pass to Eleanor, who will provide a few concluding remarks and let you guys know about how the breakout rooms that we've mentioned a few times.
Great. Well, thank you for all of your presentations there. They're incredibly interesting. And it's really wonderful to see the work that's coming out of Harvard. I think it's very consequential, and this is exactly the type of work and endeavor that HACE is developing to support. So please stay in touch with us. We've got mentorship programs. We want to continue supporting the work that you're doing. And for those of you who are already alum, please join us. Help us build our membership by sharing the bit.ly link with your friends, with your colleagues, and other members of the Harvard community. So we're going to go to breakout rooms right now.